Everybody, I'm your host, Eric Bird here at StopStrugglingNow.com. And tonight, real estate investing, is that an option for you? Starting a business, is that an option for you? Ownership matters, ladies and gentlemen, and welcome to the SSN Nation Financial Friday Night Live Stream. Stop Struggling Now gear. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get into it. Thank you all for being here this Friday night. No intros. We've had a outage in the back office on EVMux, so therefore no intros, no outros, no special effects from the past. So now you see some special effects from the new. And see what happens when your server gets hacked? Just think about this from a independent space. I don't know what server EVMux has, but they had a servers outage, which means there was probably a hack. So they probably are with the usual gatekeepers. AWS, somebody can look it up. You guys can check it out yourself. But nevertheless, share the videos because you never know who else is going to be here. So that's why you'll see a different background until the next live stream. So then I'll be back with the old, but I kind of like the new background. But I like the old as well. So we're going to bring it all back on Monday. We have to re-upload all the assets into the back office because I figured it would just reset, but it's not resetting. So just letting you guys know, no intros, no outros. This is all raw. Let's go. Real estate investing, I want to hear from you in case you guys haven't been paying attention. In the old days, what do I mean by old days? From 1950 up until 2022, home prices increased. Except now they increase so much that people cannot afford them. So does that mean it's a good investment for you? I'm referring to the liability, buying a home. It's never a bad idea if you do want to buy fourplexes, 6 units, 25 units. That's always a good investment. But there's levels to this. If I said I want to buy 50 units, I don't get any real special deals. They're going to say, Eric, you need to give us 20, 25% down. And you're going to have to guarantee it with your personal credit score. That's high risk, high rewards. But what happens if there's all of a sudden a bad economy where people don't pay you? And now you have squatters. Now you have people you need to evict. And you live in a state where you just can't evict somebody within a month. And while they're tearing up your place, you have no recourse once they leave other than to sue them. And now you have to fix up the pieces. Think about all of that. There's going to be liabilities out here no matter how you slice it. You want to start a business? Let me hear from you. Let me know who's in the house tonight because once again, the chat room is wide open. And first one in, post-retirement travel, Mr. Worldwide 2 is here. Welcome to the SSN Nation Financial Friday Night Live Stream. And he brings his tagline this evening with that icon next to his name, which I humbly appreciate, which means he's a member of the channel here on YouTube. So I greatly appreciate that. And he brings the tagline. Hello, all. Let's do this. That's what we do here, ladies and gentlemen. In honor of post-retirement travel who's going to be in DR, I have good news. You will not believe after 3 weeks, Larimar decided to come up with a solution to add my $2,000 payment. I cannot believe 3 weeks went by and they said we have a solution. Here's their solution. They're not going to add it to my payment. This is so funny stuff. They said a $2,000 credit and they put it at the end. So it takes $2,000 off of what I would owe if I was going to take it. But I'm not. But that still needed that on paper. So anyhow, Whoever's gonna get it, they owe me 17.9, nope, 16.992, which is 17 grand. Takeover payments on a 2-bedroom, 2-bath, LarimarCity.com resort. LarimarCity.com, go look at it. Tower 2 overlooks the Farallon, overlooks the city, and you can see out on your balcony as you're standing in the living room, as you're standing in your bedroom, balcony areas, inside the windows, inside the shade, you can see the ocean. No credit check, no qualifying, no barriers to entry. You're just taking over my loan, and all I need is you're gonna pay like 159, 160 grand. Take over my payments. They're not gonna be done for another year and a half, 2 years. Wake me in 2028. That's when you're gonna owe roughly 70 grand, 60 grand, something of that nature. But anyhow, if you're interested, support at stopstrugglingnow.com. Now that we got accounting somewhat corrected, we still missing some more, but it's okay. At least we got that added. Now we can get some more added. All right, they came up with that solution. Post-retirement travel, real estate investing. Check out the upcoming project coming to San Juan, Puerto Rico, called Hard Rock Residences. Walking distance to the beach and historical old San Juan with 1, 2, and 3 bedrooms. I am going to tell you right now, post-retirement travel, I am not interested. Did you see the bonds? They're at 4.7 for the 10-year. You know what that means. Over 5 for the 30. You know what this means. All the signs are here. The stock market's going up. It rose up to 500 points today in the Dow Jones. Still a losing week, but nonetheless, it still rose. This is what we're talking about, ladies and gentlemen. This choppy thing, this is going to keep happening. So you have opportunities galore all over the place that's going to be coming. I don't think it's going to be premature. I don't want to have nothing to do with real estate until wake me 2028. That's all I'm going to say. I can't see any other way out of this. Interest rates are going to be higher. Inflation is higher. They have to increase. The Fed sooner or later is going to have to. Well, okay. Just because this regime wants to burn down America, I guess you don't raise the rates when inflation is 3.4, 3.7, 4%. I guess you just do nothing. I mean, because you're going to burn it down. So, congratulations. So this is what we're talking about tonight. You better get ownership, ladies and gentlemen, on something other than what you thought was an asset. Homes are going to be liabilities. They already are. But if you think your property taxes and your insurance payments are already high, wait till you get your new premiums later this year. You do realize it costs more money to build your house now or rebuild it. So therefore they have to raise it because materials cost more. See, this is all a trickle-down theory stuff that you bypass. It's a trickle-down, all right, right over on top of your heads. And then you're going to be out of position. So, lean, mean, and being able to own so you have passive income coming in regardless of economy. Notice I said regardless of economy. That's what you're going to need. And you got to have that by December 31st, 2027. So get started. You have some tools to help you. You have artificial intelligence to help you. Just saying. Whatever your heart's desired, whatever you wanted to do, at least you can get some ideas. So I know 90% of people don't want to run their own business, don't want to have anything to do with that, but you're going to have no choice. Real estate investing is going to be investments a certain way. In fact, post-retirement travel, I need to know how much those Hard Rock residences are going to cost in San Juan, Puerto Rico. See, that's the problem. It's in San Juan, Puerto Rico, a territory of the United States that the United States doesn't give a crap about. That itself is a travesty. Puerto Rico should be a tourist destination for Americans because you don't need a passport. That would be off the charts. But what do? They want to leave ammunitions from World War II. They want to leave ammunitions from the Vietnam War. They want to leave all kind of crap, toxic chemicals on the other side of the island, not near San Juan. They want to leave a little island off the coast that would have been cool to go to. Toxic chemicals. See what I'm saying? This is how they do people. Oh, wait, hold on. Sorry. This is how they do brown people. Just getting it's correct. So that should have already been paradise. But instead, they turn it into a half-ass paradise. And half-ass because half of the island is effed up. So, I hate to be the bearer of bad news, ladies and gentlemen, but the Hard Rock residences, I have a feeling they're not going to be costing $100,000. I know they're not going to be $150,000. So we're going to look it up because we're talking about real estate. Post-retirement travel is a real estate investor. So I know he gets excited, but I don't know if he's going to buy over there. Post-retirement travel, great news, Eric. Very happy for you. Thank you. Take that money to the Hard Rock, San Juan residences. Oh my, you guys know we like doing real estate. We love doing real estate here. I love doing real estate. We have people in the house that loves doing real estate. In fact, if you love doing real estate, let me start out with help. Solutions, findhelp.org. Remember when I was saying some of you out here don't want to run your own business, and it's because of you have fear. Fear of how you set up your corporations, LLC or corporation, LLC with the subchapter S, all these little different slangs that you are not familiar with. Well, guess what? Matthew Lesko, the late night guy for 45 to 50 years, stopped here 2 years ago. He gave us a gem. He said, findhelp.org, Eric. Everybody in America, put in the zip code, get some help. But we got something better for you right now. Findhelp.org is excellent as well. You need caregiving, you need a job training, you need anything. You have nonprofits that receive money that helps you. That's right, OCs, you got help. But let's strictly go to the business front. Let's go lovesai.com/business. Hold on, let me get some stuff here. Hold on, I just realized I'm on other platforms. I didn't release the hounds on the other platforms. Didn't even realize it. Yikes. All right. Well, we got to get links in the chat room. So in case you see this on replay, just remember, go up to the top on YouTube, tap and swipe left until you see something that says, do you want to join the party? Do you want to find out about what's going on? All right. I'm sorry, you guys. Some places I just came up late. I forgot, but welcome to the SSN Nation Financial Friday Night Live Stream. We out here trying to help people. No credit check, no qualifying, no barriers to entry. You can hit me up at support@stopstrugglingnow.com. Support@stopstrugglingnow.com. And that would be greatly appreciated. And for everybody else, check the chats, because right here in the chat room, Matthew Lesko left us a gem. It's AI Business, which works the same way. You put in your zip code or your city and state, and it tells you what nonprofits, organizations that can help you form your corporations. Some of you are going to go, Eric, I can form my corporations, but that's not enough. Some of you will say, I need funding. Good news for you. They'll structure your corporation so it will be ready for a funding package. For free. Now you have no excuse. I know. It's beautiful. So again, I love when you have no excuses, because then I can't hear you. Because people are like, I can't do it. I can't do this. I say, oh no, hold on. Stop the sob story. You got some professionals, hands on. You just need to show up. They'll help you for free, and that's what they do, because they get money from the federal government and the state government. You see how this works. It's there. It's just that most people are too afraid. So you just start, ladies and gentlemen, because you're going to need ownership. You need to own something. A business is kind of ownership, but unfortunately it's hand-to-hand combat. So if you're going to do a business, just think of, how can I be sitting on a beach and have people still give me money? Kind of like what's happening with your internet service, Kind of like what happens on your social media platforms. Some of you pay them a monthly fee. Did I not say pay them for a monthly fee? What part aren't you hearing? So if you can get somebody to rent or pay you while you're on the beach for giving them a service, that would be the best thing ever right now. Because that would mean no matter what the economy is, these people need your service or want to use your service, you'll still get paid. That's the idea. And you know what the best thing is? It's easy because if you haven't learned anything over the last 10 years about social media, shenanigans gets views. Who gets the bulk of the money? The platform, because they have ads rolling around it, or you're giving them a monthly payment to make sure no ads roll around. Meanwhile, other people are not paying them and they get ads rolling around. So either way, they get money every month as long as people are coming to their platform. Now, you can play inside of their platform like people do until you get the notice, like last week, where YouTube starts going, oh, well, we're going to start paying people less. Well, we're not going to say that, but what we're going to do, we're going to change the parameters. We're going to change the algorithms. So again, this is why you don't own the platforms. I don't own EVMux. I don't own YouTube, Instagram. I don't own none of that. Twitch. I don't own what's that other one? Rumble. I don't own none of that. I can be on all of them, which we are. I can be on iHeartRadio. I can be on iTunes, which we are. We can be on Pandora, which we are. But they just give me a little piece of the pie when they feel like it. But I don't get any pieces of the pie from anybody, which is weird. You'd have 1,000 or more videos out. You would think a piece of a pie would come. But see, that's what I'm saying. Not everybody gets checks just because they have a social media presence. Just think about this, all right? Think about it. All right, ladies and gentlemen, let's go. Let's go. Brian P's in the house. Mr. Dividend has arrived. Talking about investors. He's another one. He's in the house. He's here. And yes, Mr. Dividend, I do have something ready for the PSA. Welcome to the SSN Nation Financial Friday Night Live Stream. And he brings his tagline this evening. Happy day, Eric. I hope all is well with you and your family. We hanging. Happy day, SSN family. Smash that like button. We are making money in here. That's what we do. OCs, we try to get you the money. How do you get the money? You got to have a solution. The solution is, just like you see over my shoulder, a book, you better make one. Because then somebody can rent it from you because you're going to put the book on different platforms. Then you're going to make it where it's readable. People pay for that type of thing. At least you can get some money while you're doing nothing, even though you're on somebody else's platform. Unless, of course, you want to try and market it yourself and put it on your own website and then tell people give you $1 or $2 or $5 or $20 to buy your book. You could do that, or you can place it on Amazon and then get some little kibbles and bits from that. But make sure you self-publish. Make sure you have a publishing company. That will go a long way. You can get checks, other checks that you normally would miss. Remember, you got to get royalties and things like that. Come on now. You guys paying attention yet? Everybody watching from around the world. Oh, wait, sorry. We don't get around the world. Everybody watching in the United States and the one in Canada and the one in DR and the one in EU. Thank you so much for being here. I should show you guys my back office. Oh, man. Joe Nay is in the house. In DR chilling, relaxing, out of the fray, and into paradise. Welcome to the SSN Nation Financial Friday Night Live Stream. He says, what's happening, everybody? You know what's happening. You're here. We're good. How is everybody this evening? That's what we all want to know. Everybody is sitting here being a part of the 80%ers. We hope not. We don't want you to be 80%ers. That means 8 out of 10 people is living paycheck to paycheck. That's why you need findhelp.org. That's why you need Lesko, Lesko, lovesai.com/business. Especially business. The reason I'm saying business is because no matter what you do, ownership matters. So let me give you one thing that you need to do, which is actually turns into two. Number one, in the structure for today and forever, make sure you have a holding company and your holding company owns your LLC. Both can be LLCs. Nothing has to be a corporation. If you want to make them a corporation, you're going to have higher fees, but it's okay. That just means more asset protection. Now, holding company, LLC. Simple. Holding company does not interact with the public. Other than press releases or something. Hey, we decided to buy another company. Your operating company deals with the public. And who does the public sue? The operating company. All assets in that operating company that the holding company owns. Guess who has the assets? The holding company. So, if they ever get sued, there's nothing there. Do you understand? Okay, ladies and gentlemen? And so, you want to be a big dog? Then you say, hey, I'm going to start this one company. But then you have to start thinking, if I start this company, do I want everything to operate out of here? Or should I make another company that's under the holding company? So now you have two companies that are separate, separating the business and exposure. Because remember, if you try to do everything under one LLC and they actually do multiple things, then if you actually get hemmed up by one part of this company, then all of it gets hemmed up. Because we are the most litigious country in the world, you know. So, just think you separate it. Now you have two subsidiaries under your holding company. That protects you. Assets from both belong up at the holding company because they don't interact with nobody. So if anything happens down here, you don't lose the empire. Got it? Oh, and by the way, let's do some other simple things too. If you have a setup like that, and you have, let's say, trademarks, let's say patents, let's say source codes, whatever, that means your holding company has those. Not these guys down here. You don't want to be top dogs. You're just going to license down to these guys and say, okay, you guys can use all these things, and we'll charge 2% of your gross. Just for IRS purposes for startup companies. Just so you guys understand, we need to comply. You can't go for free. You should not go 1% either. 2% for startup, you good. You don't need to go 3 or 4. I'm just saying, because it's off of gross. So that means they're actually separate businesses. They have to be separate. So you're not going to give another business free, right? You're not going to let them use your intellectual properties for free. Business, ladies and gentlemen. If you're going to be in business, this is what you have to do. All right? So, you guys got your pen, pads, and papers ready? Oh, I know I came out different today. It's because I've been doing some more research on some other things, like I told you guys on Wednesday. I finally started wrapping it up. And when I started wrapping it up, it took forever to wrap up this stuff that I'm looking at. I was like, will this ever end? It was like, hell no, it will never end. You know why it'll never end? It's because once you start going down a path, then your mind starts thinking, wait a minute, I can do this, I can do that, I can do this. You know what? But what if I decide to start doing something? What would happen? And luckily we have AI, so you can actually throw stuff against the wall and say, hey, I want to do this. What do you think would happen? Even though you know already what's going to happen. But I want to see what AI is going to say. So I would say, what's going to happen? And it starts saying, oh, you're doing this, that. You'd be doing this, that, and the other. You could do this. Let me help you. Let me tell you all these things that you can do. And I'm sitting there like, I already know. I just want to see what's going to happen. How good are you? This is why I say you don't really need AI. They're not really the ultimate solution because they are wrong sometimes. I'll give you a perfect example shortly. But Joe Nay, let me know how things are going on the island, man. I just smashed that like button. That's right, everybody. Give it a smash on the like button. You guys didn't like that so well. Let me explain something else. Before the end of this year, we're at 2 years, 8 months. We started 2 years, 8 months ago with a countdown. We said you need a bank account outside the United States. We said you need real estate, which is a business, or a business outside the United States. And you need a 775 credit score by the end of the year. I am looking for the 36 months at 0% interest credit card right now. I'm hunting. So far, all I can see is the 24. Even though 24 is great too. I have that. But I want to see 0% for 36 months is what my prediction was. August is here. Hasn't showed up yet. September. It was either August, September. I'm waiting. It still hasn't showed up. That puts you in position because they're going to be hunting for people that pay. What are they going to do? They'll probably have an annual fee. Or there's going to be some way they can get a little bit of money. But get the 24 right now. That goes a long way for 80% of you because that means you can pay 100% towards your balance instead of paying 36% or 25% or 18% and paying minimums. Because even that minimum you're paying right now, even if you paid that for the next 24 months and 99.9% of it goes towards the principal, that's better than what you got right now. You get it? That helps you, ladies and gentlemen. All right. Now, I hope I went over this business structure. It doesn't matter what the business structure is. If you want to be in real estate, fine. You better make an LLC for each separate real estate property. If you want to make a film and you want to make shorts and you make tons of shorts, each short film better have its own LLC. Every intellectual property should have its own LLC. Now, you should have a holding company because the sum of all the parts equals something. So if you have 6 homes, 6 LLCs held under a holding company, let's just say all the homes are worth $400,000. You have 6 of them, $2.4 million. You have people renting, and you tell somebody, I want to sell this holding company. They go, what? What did you just say? Oh, listen here, man. I make like, let me see, I have to say, if it's 2.6, we get $290,000 profit every year. That'd be a lot, but I'm just saying. That's a bad example, but nonetheless, we'll go with that. And they say, oh, how much you want? Because the sum of all the parts are more valuable than just one piece. You just created an empire. Welcome to empire building 2026 and beyond, because you better be setting things up this way and you better be owning everything that somebody else needs to buy or rent to you. So while you're sleeping, you're still going to have to do work, though. This is why I told you guys a long time ago. Have you ever seen millionaires and billionaires sitting around having fun? Chilling? No, you don't. Just because they own a yacht doesn't mean anything. Just because they go hang out on the yacht for a week or 2 or a month, you know what they're doing? What's happening with this company, man? What's going down? You think they're really not in touch? If your company's worth hundreds of millions of dollars or billions of dollars, you really think you're going to sit on the sideline and let somebody else just run this stuff and be like, oh, I'm good? Wrong. Okay? That's not how it works. All right, enough on the speech patterns. But nonetheless, ladies and gentlemen, make sure you guys get your ownership properly this time. You can't be running around talking about, hey, in fact, I'm going to show you guys something that that came across my thing today. Because speaking of this ownership stuff, this is major. Because what's going to end up happening at this point is all of you who don't own something, it can be taken away from you. That's what I'm trying to explain. Your job can be taken away from you. Your business that you start and just said, well, I'm just going to have an LLC, no big deal. A lawsuit, you're done. All right. And they could also pierce the corporate veil, and then they go after your personal assets. All right. Just keep all this in mind. This is asset protection I'm just talking about earlier when I talked about the holding company and all that. That's an asset protection. Even if you have one LLC, you should do it, because people are going to get desperate out here. And the higher the risk, the more asset protection you better have. All right. Let's go. Oh, by the way, because of post-retirement travel, does your Larimar contract shows the stipulation that final price may fluctuate depending on the cost of the materials? No, it does not. No, it does not. It's in stone. There is no increase in pricing, and unfortunately for everybody else, there was only two companies that did that. One was Noval, one was Larimar. Everybody else, good luck. Because whether you don't have it, this is what happened as well at across the street from Jonay, Christopher. At Christopher, they didn't have anything one way or another in their contract. So at the end of, the people paid like 40 grand for a 1 bedroom, 50 grand for 2 bedrooms, 60 grand, 65 grand for a 3 bedroom. They were lovely. They paid it off. Next thing they know, they got bills. They told the developer told everybody, oh no, it's 30% more. 30, not 3, 30. They had a lawsuit and everything going down. Maybe even still does. I don't know. But that's a thing. So if your contract doesn't state it, the developers can do whatever they want. If your contract does state it, then they're going to tell you it's based on inflation. They can go by statistics 1 or whatever in DR. But the fact of the matter is, if they say it's 5%, you're going to pay 5% more. And if you own it, for every 100,000, that's 5,000. So if you bought something for 100 grand, you're going to owe 5 grand more this year that they're going to add on top, either of your payment program or put on the back end. Either way is bad news. No matter how you slice it, bad news. But yes, 99% of all projects increase the price. But Larimar, you're locked. So anybody that wants to buy my unit, you're locked. There's no price increase. Can't do it. This is why, you know what? Remember we were talking about that $75 thing? Hold on, man. I got a lot to show you guys today. This is wild. I couldn't believe it. I was talking about Larimar, that 75, they must be watching the show. That 75 million Panama. Where was it? It came up. I don't know where it is, though. I think it was on their web. It's on Instagram. Let's see. Where is it? Here it is. It's on their own Instagram page. Check this out, ladies and gentlemen. Is this wild or what? They posted this. Remember? That 75 million Panama bond? They posted it. They posted this up. I couldn't believe it. I said, is this a joke? They did. This is crazy. Okay, they posted up. Look at here. The program rated A by Moody's Local Panama. You guys know A is interesting. I don't know how it's rated A because I don't know what assets they're talking about, because the only asset they're going to be having is the contracts. That's why they want to make sure they keep those contracts in place. Remember, I used to tell you guys about those derivatives? If each contract is valued at $200,000 for a 2 bedroom and you got 1,000 of them, you can start doing the math. Is that 200 million? But the point is, now they can go get bonds Not from Spain, where they're on the stock exchange, but they're running over to Panama. Less, way less regulation. And that's why on here it says the third thing down at the bottom, third paragraph right there. Notice, can you read that? Look at the record does not imply that the 75 million was placed immediately. That's correct. It's because it's bonds. People have to pay and they got to pay interest on this. Interest. So every delay, they're paying interest until they can pay them back. And the only way they can pay them back is if, and give them their annual, whatever it's going to be. I'm predicting 8-9% or something. Every year they got to pay that. That's sucking the life out of project. So they have only one role. They have to keep selling. Even though stuff won't be built till 2033, they got to keep selling. Because 8% on, let's just say, $10 million is still close to $1 million. That's $800,000 in interest. That's the equivalent of at least 3 or 4 units. So they're going to sell tons more. But the problem is not everybody's putting down 100%. Most people are putting down 20%. 20% of a 200,000 is only $40,000. So now all of a sudden, you're like, I need to sell 20 units. It's fine. We will, over the course of a year, maybe sell well more than that. But the fact of the matter is, now you have to produce. You know how much it costs to have 5, 6, 10 buildings that's under construction at the same time? You got to put in water, sewer, garbage, plumbing. You know how you can eat through like $10 million just like that? That's where they're at. No surprise. But this is a shocker. We were just talking about it on Wednesday, and they posted this up. I was like, you got to be kidding me right now. I'm glad you guys still watch the show. I just can't believe you guys did this. You didn't have to. But of course, why listen to the black guy? Why listen to the black guy 3-4 years ago? It's because you wouldn't have had to do this shit, dumbasses. You didn't want to listen. You wanted to go rogue. You wanted to do it your own way and lie to people. It's fine. You get what you deserve. All right, ladies and gentlemen, I'm still talking smack. But the point of the matter is, it didn't have to go this way. Melanie Speaks is in the house. She's here. The author. What I talking about tonight? Ownership, ladies and gentlemen. Publishing, authorship. That means she can put her gear all over the planet, get royalties. That also means she can do book signings, which she does, and gets some more products sold and all over the place. And oh, by the way, I got to give her congratulations because I think I forgot last time I saw you. Congratulations, Dr. Melanie Bonita. A superstar has arrived. Welcome to the SSN Nation Financial Friday Night Live Stream. Multiple streams to live your dreams, and you got to do ownership right now, ladies and gentlemen. She has ownership. That's what we're talking about out here. That's what I was saying. She's got books. You can go see on Amazon. Just saying. I said plural. All right. So once again, I'm ready, she says. I know she is. She is. Should the holding company recall won't stop. You got that right. Can the holding company be in a trust? Oh, man. Oh, man. Melanie Bonita. This actually is what I was going to talk about right now. I saw this right here. Let me see if I have it. Oh, my goodness. This is right on schedule. I made this today. This dude right here popped up on Instagram when I saw that stuff today. Look, here it is. I saw this today. Trust, holding company, LLC, assets. All right. The wealth blueprint. This is what you're talking about, I'm assuming. This same type structure. Okay, I'll have to preface this with this is cute. All right. Notice the holding company, the LLC. Notice the trust. The trust owns the holding company. Let's just put it this way: a wealth advisor will tell you to do this. I personally, I said, I don't like doing it personally. It's up to you though. I just don't like doing this because there's reverse situation to me. And yes, I can put it into AI and ask them because I can do that because I understand what they're doing. They're doing basically the other part. The holding company with the LLC. The problem is, see at the bottom where they have assets? That's not the situation. The assets are supposed to be above you. In other words, not in the LLC. The LLC is not holding assets because you're going to get sued, right? If you operate in general public, you're going to get sued. Let's just call it what it is. If you're in business long enough, you'll get sued. It depends on what type of business, but I mean, you can minimize that by never getting sued. But the point is, LLC should not hold assets because if you get sued, those assets get taken if you lose the lawsuit. So, in other words, you ever heard of that Game? The Game is a rapper from LA, and he had a label. So his label was an LLC. He lost the lawsuit. They immediately went after his label because his label's holding Masters Publishing assets. And so he tried to do some okey doke stuff, but unfortunately it was too late. You have to set this up originally. You can't just go, oh, I'm in a lawsuit. Let me do all this stuff. Nope, sorry, it doesn't work like this. Okay, here, I stalled. Let me give you guys my assessment of this setup. Because when I saw this, and the reason why I have this is because I said, hey, man, I went over to AI and I said, I know the answer. But I put it in AI. I put this image in AI. And I said, hey, what do you think of this? In fact, I might even have the answer right here, what they told me. Hold on, I might have this. It said something to the effect of, this is a well-known asset protection that wealth planners kind of do along that line. And it gave, kind of like good review, good kind of talk about it. You're protecting your assets. You protect your personal liability. Let me see if I can find it. Protects your personal liability. And so that's true because if you have a irrevocable trust, that means you have a trustee. And the trust owns your holding company. So if there's ever any lawsuits and somehow they pierce your corporate veil, they can't do your trust. And then your trust has the assets. So they can't pierce that because you never own the trust. You understand? You're not the trustee. And even if you were, it wouldn't matter because you don't own the trust. Any assets in there, you no longer consider them as your assets, so it's not personal property. So that's the idea behind this irrevocable trust in the first place. You put a house in there, you put assets in a regular trust. When you go through probate and you pass away, then you have it either distributed directly to who you want it to, the beneficiaries, or you keep it up and running as a trust that runs something. So in this case, this is a trust that runs an organization, a holding company. Hold on, let me see if I can find it. So then I can read exactly how this went down. So then you guys would, oh, wait, hold on. Is this it? Let me see. No, it's at the beginning. I started off my day. Let me see. Hold on, let me see if I can find it. Here we go. I wasn't lying. Look, here we go, ladies and gentlemen. So now, do you trust AI? Here we go. Okay, here we go. Here's what I put down, just so you guys get full. This is great. I'm glad you brought this up. A trust pays more in taxes. This is what I put down after I sent this, right? A trust pays more in taxes. The holding company structure is nice, but I don't see any reason for trust to own holding company. Injecting money into a trust has repercussions. Remember, a trust has to pay damn near 30% in taxes for any money that's held in a trust. If you don't distribute it to the beneficiaries, which by the way, the beneficiaries have to you have to pass it through the tax burden. Otherwise, you're going to be, if you hold the money in the trust, listen, you're going to be paying like 30% of the money's gone. So therefore, you better distribute it to the beneficiaries. Because if you don't, then what's going to happen? 30 some percent in taxes for what you got in there at the end of the year. So you got to distribute it. And based on the separate distributions, now all of a sudden you distribute it so you pass on depending on the person's tax bracket. So if the beneficiary is making $50,000 a year and you give him $50,000, his tax bracket's lower than if a person makes $125,000 a year and you give them their $50,000. That's the point. They're going to have a lower tax rate than 30% is the point. So why would that would be irresponsible of a trust to allow $100,000 all of a sudden get swept out by almost 30,000 when all you had to do was give it to the beneficiaries in the first place? And you have no tax liability and the beneficiaries are like, "Oh, thank you so much for the 33,000. I could have used it," and all they got to do is pay a freaking like 20% or not even that, 15% or something. All I'm saying is that's how I was going by this. But anyhow, just so you guys understand, that's why I was talking like this. Okay. Injecting money into the trust has repercussions if you hold funds without releasing to beneficiaries. Extra work for no reason. That's how I did it. Okay. Here's how they responded. The ultimate reason a trust sits at the top of the holding company structure is not for income tax savings, but for absolute asset protection, privacy, and the elimination of probate. All of that is true. But just remember, there are trustees responsible for your trust. You're going to trust a trustee is the fail point because the trustee, they can wake up one day and say, "Hey man, I want to have a fee." And by every right, the trustee can get paid from the trust. And unless it's specified, they can by rights, by law, say, "I want 3% a month out of the trust," siphoning off your funds. And by the way, a trustee can do whatever they want with your trust. In other words, they now run your organization because the trust owns the holding company. You understand that problem. So why would, okay, never mind. You understand that problem. Here we go. You are completely correct. That non-grantor trust, because that's what it has to be in order to have asset protection for privacy, elimination of probate. It has to be a non-grantor trust in order for some sort of protection. Okay, here you go. You are completely correct. The non-grantor trust reached the highest federal income tax bracket, $15,450 in 2026, much faster than individuals or corporations, and retaining income inside the trust triggers severe tax consequences. Did I not tell you? All right. However, this structure is designed to separate ownership and control from personal liability rather than an act as a tax shelter. I'm like, well, then what? See, my point is, like I was about to say, I knew what the answer was, but I was like, I don't really care about tax. If I have a corporation, if I have an LLC, if I have a business, I can get away with taxes due to the expenses. But in a trust, I can't wipe that stuff out. That's the problem. I can't hold money. So it'd be nice if I can hold $3 million, $10 million in there. But I'm going to be paying taxes if I don't distribute it. So why would I pay taxes when I could just hold it in a corp? Okay, never mind. I won't get into it. Why a trust owns the holding company. I'll just give you some things: anonymity and privacy, outside in liability protection. If you personally own a holding company and get sued individually, personal car accident, a creditor can seize your personal shares of the holding company. Okay, they went a step and beyond. How many of you have an LLC and you have shares? You don't. But the point is, they're going above and beyond. But let's say you have a company that's in Wyoming. Well, no, that's a bad example. Let's say you allowed to have an LLC that's going to have shares, and it's just Florida, for instance, right? Let's say it's there. Then they are correct. They can sue you. That is correct. That is why you don't have assets in your LLC. You don't be like game. You don't have assets in your LLC and you have it hold up in your holding company. So when they sue you, you eliminate this problem. Do you understand? All right? So they can tell me this, but that's the whole reason I have this. And they're saying shares in a holding company. Well, I'm not going to own no shares in a holding company. What are we talking about right now? All right, never mind. But this is the worst case scenario because a lot of people like to get shares in a company, and they are right. That is personal. So you should never do that either. You don't want to be, like I said, you don't want to actually be like the top dog, all right? You just want to be, I work here kind of thing. I manage the situation up in here. I don't really need shares. I need to be on the board, though. Just saying. I need to be on the board. I need to have a board and two more of my friends. And particularly family member would help to make sure the votes are always 2-1. Worst case scenario. Just letting you guys know. All right, let me get into this. This is going to be deep tonight. Thank you so much, Melanie Manita. Thank you so very much. Congrats, Melanie, all the way to the top. Press on. Yeah, man. She's doing some damn things. Own nothing, control everything. She's exactly right. So anyhow, let's get back to the structure because this structure that she's talking about, it can be done. But I'll ultimately tell you why I don't do it. I'm going to tell you why. Bypassing probate, this is true. But see, if you have an LLC or a corporation, you should have a succession plan in place. So your corporation will bypass it anyhow. Just saying. All right. But okay, so how the income flows, all this, all right, fine. We don't really care about that, I don't think. The real downsize, extra work and cost. You are spot on that this setup creates a massive amount of track work. For an everyday investor, this structure is often expensive overkill. That's why I have my point of view. Administrative overhead. You will face multiple annual state registration fees for each LLC, separate business bank accounts, separate bookkeeping, and potentially multiple tax returns. There's no potentially. There's going to be because your trust has to have its own bookkeeping and tax returns. Your separate companies all have to be separate LLCs. They have their own separate bookkeeping, which is normal in the overall scheme of things, even if you have just a holding company. But legal setup cost, implementing a multi-tier blueprint like the one pictured, typically requires thousands of dollars of upfront estate planning and corporate attorney fees to ensure the legal veil isn't easily pierced by a court. All right, so here's my response. This keeps going. If you personally own a company and get sued individually, personal car account accident, a creditor can seize your personal shares of the holding company. I wrote, this is incorrect. An LLC corporation protects your personal assets. A holding company not interacting with public, not operating, isn't going to be sued or get their corporate veil pierced. You are also entirely correct that a non-operating holding company is unlikely to face it as their response. Oh, wait, I didn't finish mine. A holding company, but operating isn't going to get sued or pierce the corporate veil. So here's what happens. You are exactly right about the core purpose of an LLC or corporation. It creates a legal shield that protects your personal assets from the business's liabilities. If a business under the holding company gets sued, your personal house, car, bank accounts are safely insulated behind the corporate veil. You are also entirely correct that a non operating holding company is highly unlikely to face its own direct lawsuits because it does not interact with the public. But, however, the scenario where personal shares can be seized represents the exact opposite direction of liability. What asset protection attorneys call outside in liability for a personal lawsuit. To clear up how the law treats these two completely different directions, help to look at them side by side. So then they did this. I'm not going to go through that, but you guys can see they set it up side by side. And then, so everybody here who's watching, they can always stop and look for themselves. But see, you guys can see. Hold on, let me see who is sued. I'll go up and back. Let me go down so you guys can see. All right. So they give that response. All right. You guys know where this is going. Um, they go over the. Okay. Okay. I'll get in. We're going to spend 5 more minutes on this. All right. This is very important for people. This is not hard, ladies and gentlemen. We're going down the line, but it's really not this hard. How a personal judgment affects personally owned shares. This is for people that's going to set it up with that holding company. I mean, the infrastructure with the trust, holding company, LLC structure, right? Remember, some people like to have shares, so there's nothing wrong with that, but shares are personal. That's not in the corporation. So that's why the guys that get shares, like Elon Musk, for instance, he immediately goes off and borrows against it. So that way, when he loses his lawsuits, the money's borrowed. It's not an asset. He's put his shares up as collateral. And since he did, the first person, whoever gave him the loan, is the first person in line. So the person can sue, but they'll never collect any money because he's never going to pay off the shares. He's just going to keep borrowing against them. And that's why they don't have taxes. You have to understand that's how this works, all right? So that's what they're talking about here. They're saying if you act like a dummy and you have shares and you don't do what the big guys do, your shares have value. And your shares, if you have majority shares and you do something really stupid, you have majority shares and they pierce your corporate veil. And now, since you have majority of shares, you now have control of the board. Think about that. Whether you have a irrevocable trust or not. Okay. All right. But I'll just say what they say. You personally that exceeds your insurance policy limits. For a good point. A creditor cannot take the assets inside the holding company directly, but they can go after your ownership interest in the holding company. Depending on how the company is structured, there you go. And the state you live in, a creditor can approach this in two ways. Charging orders. That means the judge says, hey, we're going to go over there and take his money. In many states, a creditor's primary remedy against an LLC is a charging order. This means they cannot seize the company or force it to sell assets, but they pin a lien to your ownership. If the holding company ever distributes profits to you, there you go, ladies and gentlemen. That money must go directly to the creditor instead. You know, there was this thing about this lady Tasha K, and she was talking mess about Cardi B, which were lies. Cardi B took her to court. Tasha K lost. Cardi B promptly went after all her stuff. She had LLC. She had this, that, and the other. She tried to hide stuff. Didn't go well for her. Millions of dollars and attorney fees and all that did not go well. So again, you better set your stuff up right, is all I'm trying to tell you. Corporate share seizure. This is important. If your holding company is structured as a corporation rather than an LLC, charging order protections generally do not apply. because you're going to have a board. Just remember the board thing, all right? Okay. Does not apply. Fully seize your shares, step into the shoes of the shareholder, and potentially vote and liquidate the company's assets to pay off your personal debt. That's when you have an LLC. So I'm just saying, why the trust comes back into play. The specific outside-in vulnerability is the only reason the trust sits at the very top of the blueprint, because an irrevocable trust legally owns the holding company shares. You do not own them personally. So now you're giving the trustee controlling shares of your corporation. You're going to trust your trustee? I'm asking for all the people that's been ripped off by their trustee. All right? You understand that is a huge liability. A trustee could actually be a pro-trust trustee that's a bank. It could be a legal, a lawyer, a legal platform. It could be anything. They have different, anybody can be a trustee basically. All right, a law firm, anybody. All right. The vast majority of people, standard personal umbrella insurance policies provide more than enough protection against these personal outside-in risks without needing a complex trust and holding company structure. You want to pay the insurance to make sure that if you get sued, you know how much that insurance costs? It's not that much, quite frankly. That is an option somewhat, but I wouldn't. No. I'm not going to trust insurance companies to pay out. We live in America. How many times have you seen insurance companies that leave people hanging? Come on now. Come on now. So here's my response. You can't reach inside corporation to take shares that have never been allocated, taken into a personal portfolio. You are entirely correct that a creditor cannot reach inside a corporation to seize corporate assets to satisfy a personal debt. I know this. That's why I'm talking to you, because I know I'm not doing this structure at all. It leaves too many liability situations. But anyhow, if a corporation owns a building or a bank account, a personal creditor cannot touch those assets directly. The corporate veil works both ways in that regard. I know this. That's why you have a LLC or a corporation in the first place. Anyhow, specific mechanical loophole that asset protection planners worry about involves unallocated or unissued shares in closely held or single member setups. You understand what I'm saying? Single member setups. Remember, you want to be a sole member. You want to be the hot shot. You want to say everywhere, I own this. People can look it up. I own it. You got a liability, my friend. All right. That's why you want managed LLC, right? Managed. That means you are a manager of the LLC. You're not the sole and single member. You're done already as soon as you set it up like that. All right. The trap of the unallocated shares. Now, again, I don't like shares, but all right. If a corporation is formed, but shares are never formally issued, allocated, or transferred into a personal portfolio, a common assumption is that because you don't own the stock on paper, a creditor cannot take it. From a court's perspective, this creates two potential vulnerabilities: the alter ego or resulting ownership doctrine. A corporation cannot exist without ownership. That is true. If you filed the articles of incorporation, funded the bank account, and controlled the company, a court will look at the substance over form. If no shares were issued, the court will determine that you are 100% de facto owner. They are exactly right about this. Exactly right about this, but we know this. Because the ownership right belongs to you. The court can order you to issue those shares to yourself or directly to the creditor to satisfy the judgment. That's right, because you're the sole guy. So they're saying, well, this is your alter ego. You control this. We're going to allow them to sue you. And now we're going to force you. Otherwise, you're in contempt of court, costing you whatever the judge says. Reverse veil piercing. While standard veil piercing lets a business creditor attack your personal assets, Outsider reverse veil piercing allows a personal creditor to bypass the shield and attack the corporation's assets directly. If a debtor hides money inside a corporate shell without allocating shares to keep it out of their personal portfolio, don't do that. Keeps Courts in many jurisdictions will rule that corporation is a mere alter ego. They are right. They're all right. So it would look like maybe you should do the irrevocable trust. So then I kind of like had enough. All right. So I started talking about what you should be talking about. And I said, this is why you have a board who runs the corporation. Then it responds. Here, look. I just write real fast. You know what I mean? Look at what it says. You have hit in the absolute nail on the head regarding true corporate governance. I said, I know. Having a board of directors to run the corporation. Aha. And separate management from ownership. Aha. Is exactly how large, sophisticated companies protect their operations. Exactly. It's that simple. Well, kind of. Let me get on to something else because its jurisdiction matters. Nevada, Wyoming, Delaware. That's where you should be with that structure. All right? Just remember that. Don't act like hot dog again. Again, remember, every time you want to puff and do all this stuff and act like I own this, I own that, this structure right here with the 3 board members matters. If you say, I carry 51% of the board votes, that by rights means you control the organization. It's not actually a real board. So now a judge is going to say, oh, wait, hold on, man. This is your alter ego then. You're controlling everything. So therefore, you're going to get your corporation pierced. You understand? Just so you understand. That's why all the rich guys have multiple board members. They vote. And why do they vote? Because the fiduciary duty of a board member is to sit there and say, hey, is this in the best interest of the corporation? So if somebody sued me for $2 million, now all of a sudden, I'm on the board. I say no, no, or let's reverse it because it's not going to be my alter ego. I vote yes, pay the people. But guess what? Because you don't control 50%, 50.5% or more, the rest of the board says, oh, hell no. We're not paying out any money. Hell no. Now the judge is blocked. You understand? Damn, we're up here in the high weeds on the tall, darkened days of how you jack the government. Like I said, I am the most dangerous person in America. All right, so the board's ultimate shield, discretionary control. If a personal creditor manages to seize your personal shareholder voting rights, that's a problem, or personal shares, they might expect to immediately drain the holding company's bank accounts. However, the presence of an active board of directors creates a legal roadblock. Now, you guys know, I already know the answer. I just want to see what they're going to say. Obviously, I know what I say. Okay, fiduciary duty to the corporation? Exactly. The board's legal duty is to the health of the corporation itself, not to the individual person, desires or shareholders creditor. Discretionary distributions. A creditor cannot force a board of directors to declare a dividend or distribute cash. If the board decides that retaining the cash inside the holding company is best for the business, the creditor is stuck holding shares but receiving $0. You're damn right. We already knew this though. All right. The phantom tax trap. If the holding company is a pass-through entity, oh, no, don't do that. Like an S corporation, the creditor who seeded the shares might even find themselves legally responsible for paying taxes on the company's profits, even though the board refused to distribute any actual cash to them. Okay, now they're talking about the vulnerability closely held holding companies. We got another 2 minutes. If personal creditor sues you and wins, a judge can issue a turnover order. This is a direct command to you as an individual. That's why you have to have a board. All right. The judge can order you to use your shareholder voting power. That's what I was referring to before. If you have the majority of voting power, you want to be the big dog. Oh, I run the company and all that. You're in trouble, buddy. If they pierce your veil, because appoint the creditor to the board and vote to liquidate the corporate assets because they have the majority power in your place. And if you refuse, you can be held in contempt of court. And they're saying where the trust changes the math. This exact courtroom reality is why the original blueprint connects a trust to the board. If an irrevocable trust owns the shares, notice what I just said, the trust chooses the board of directors, not you personally. That is correct. If a judge orders you to dismantle the company, you can truthfully tell the court, I don't have the legal power to do so. That is true. The trustee of the independent trust controls the shares. I'll repeat, the trustee of the independent trust controls the shares, and they will not vote to dissolve the board. Now, you just heard that. I repeated it twice. I already told you what your point is completely correct. A properly run board of directors creates a massive firewall for a holding company to truly protect you. It requires rigorous corporate hygiene, holding real meetings, of course, every quarter at least, taking official minutes, of course, and keeping business decisions strictly separated from personal life, of course. That's why you're going to have your board meeting and you say, hey, man, we're gonna actually license our trademarks to our subsidiary. You have to have a meeting about this. You can't just arbitrarily do it. So you got to have a resolution. You have to say, okay, this is what we talked about. We vote, yay, nay, yay. Okay, 2-1. Let's go. All right. But you have to record it, whether it's on paper or on a video, and you have to have minutes, which is none of this is big deals. So, but the point is, you have to structure it accordingly. You can't have, if you own all the businesses underneath, every time you interact with the business on both sides of the fence, you have to have a meeting about, are we going to do this deal? That's what's going to happen. That's how you have to run it. You can't just do it like you own LLC where you can make the decision. You have to do it with the board. You have to write it up, and you better keep records. All right? Just so you understand. Because if you don't, they'll pierce your corporate veil. Yeah, okay. So I responded. Look at here. Okay? Yeah, well, if you're really worried about all this, then why aren't you worried about 90% of trustees with this setup takes control and siphons off corporate and trust assets like it's their piggy bank? Oh, yeah. Look at what it said. You have just exposed the biggest problem, the biggest risk of these elaborate wealth blueprints. While asset protection salesmen on social media love to talk about how trusts protect you from lawsuits, they always hide the terrifying flip side. When you put your assets into an irrevocable trust, you are legally handing the keys of your life's work to a third-party trustee. If you appoint the wrong trustee, they can absolutely treat your corporate and trust assets like their personal piggy bank, embezzle funds, and mismanage the company into the ground. Reality of trustee fraud and mismanagement. You are correctly right to worry about this. Once an irrevocable trust owns your holding company, the trustee has legal title. While they have a strict legal fiduciary duty to act honestly, rogue trustees exploit their power in several ways. Siphoning and corporate looting. Look, you see that? Right. A rogue trustee can use their shareholder power to appoint themselves to your holding company's board. I know. Vote themselves massive corporate salaries. I know. Or skim money through consulting fees. I know. Directly out of the business bank accounts. Excessive fees. Trustees are legally allowed to charge reasonable fees for managing the trust. A predatory trustee can bleed the trust dry by charging exorbitant administrative, legal, and management fees that eat up all your corporate profits. Yeah. Asset liquidation. If the trust agreement gives them broad investment powers, an untrustworthy trustee could legally sell off your real estate or business interest under the guise of rebalancing the trust portfolio, moving the cash into accounts you cannot easily track. How professionals prevent the piggy bank nightmare. Wealthy families use these structures almost never give a single individual total unchecked control. To prevent a trustee from stealing corporate assets, the blueprint must include strict legal checks and balances. Really? The ultimate kill switch. This is a separate independent party, usually a trust attorney or CPA whose only job is to watch the trustee. So get this. You have a trustee. Now you're having to pay somebody else to watch the trustee. Are we really going through all that? I don't think I am. You can forget that crap. That ain't happening. If the trustee shows a single red flag, the trust protector has the immediate legal authority to fire the trustee on the spot and replace them. Corporate board firewalls. Just because a trustee owns the corporate shares doesn't mean they can walk into the business and take money. The holding company's bylaws can require multiple board signatures for any distribution transaction, this is true, and salary increase over a certain amount, locking the trustee out of daily operational cash. Again, why am I setting this up to go through all this? This makes no sense to me, but okay, this is why I know. Institutional independent co-trustees. Oh, that's great. Instead of giving power to a single person, planners are often appoint a regulated, bonded institutional trust company alongside a trusted family member. The trust company acts as a watchdog, refusing to allow any shady, unapproved. Why am I going through all that? That costs money. The skepticism is 100% justified. If you build the structure shown in the video without heavy safeguards, you are simply trading the risk of random lawsuit for the risk of getting robbed by your own trustee. For the vast majority of business owners, the risk of a rogue trustee is far higher than the risk of an outside-in lawsuit. You're damn right. I'll repeat. For the vast majority of business owners, the risk of a rogue, I can't find it, but you guys can see it, risk of a, what is it? I can't, lawsuit, risk of getting robbed by your own trustee and all that jazz. You guys can see it, man. Look, I'm not making this stuff up. Just to make it appear I'm the guy. Outside-in lawsuit that bypasses standard business and good personal. All right, ladies and gentlemen. So I responded with this. All this is well and good. Wait, all this is well and good, but we know trustee gets fees. So that in itself is not abnormal. Siphoning funds, you do realize 99% of Wall Street corporations employ holding company strategy versus trust owning holding company strategy. And the response, you have accurately identified the exact dividing line between Wall Street corporate structure and personal estate planning. I'm not trying to do estate planning. I'm trying to run a corporation so nobody can jack us. But anyhow, your observation is completely right. 99% of Wall Street corporations use a standalone holding company strategy without a trust owning them. I know. Publicly traded giants like Alphabet, which is Google, Berkshire Hathaway, do not have an irrevocable trust sitting at the top. They stop exactly at the corporate or holding company level. Why Wall Street stops? Because Wall Street conglomerates avoid putting a trust at the top of their corporate blueprint for logical reasons. Public ownership. Publicly traded holding companies are owned by millions of individual shareholders and institutional investors via stock markets. You can not put a publicly traded corporation inside a family trust because the public owns the shares. No death, probate risk. Corporations have perpetual existence. They do not die, get sick, or face probate court. Exactly. So there's no reason. Again, when a CEO passes away, the company keeps running seamlessly. A private individual needs a trust to pass down their wealth privately. A multi-billion-dollar public entity does not. Capital raising flexibility. One of the things about an irrevocable trust is you can't traditionally get loans very easily. So if a trust owns the corporation, you can forget pretty much about rolling out here talking about, oh, yeah, we want to get a loan. You're going to have to jump through hoops. Anyhow, here they talk. A holding company can issue a new shares of stock, raise venture capital. This is true. Or take a massive corporate debt to fund its subsidiaries. If a private trust owned 100% of the corporation, the company's ability to pull in outside investors would be legally choked off. Another reason. Corporate strategy. All right. Hopefully, this 20, 30 minutes is worth it, ladies and gentlemen. This is ownership 101. All right. This is what you do. This is the structures. And it's worth it. And especially what's about to happen now. The sum of all the parts, like I said at the beginning, matters. All right. So the big takeaway. Okay, I was 2 minutes, another two. The social media video and the image takes a tool meant for billion-dollar public corporation operations, a holding company, and tries to mash it together with a tool meant for private estate planning and irrevocable trust to sell an overly complex, expensive legal package. Tell me about it. As you noted throughout this conversation, a trustee's fees, risk of siphoning funds, massive operational overhead, and compressed trust tax rates make this blueprint an administrative nightmare for a regular business owner. Wall Street companies focus on holding company because it protects the business operations, which is usually all standard business owner actually wants. You're damn right. Okay. I go in further. Yes, but all the reasons you suggested was a problem. How they don't have problems personally when they get sued. So they don't have, in other words, you don't have problems personally when you get sued when you have an LLC or corporation because that is the definition of a LLC or corporation. You are protected. Your personal assets are protected because you have the setup. And so it starts going corporate indemnification and D&O. All right, directors and officers insurance you can get, for instance. So all that little bit of money you're going to pay. So why do I need it again? I'm not a fan of what that image is. Borrowing against shares, that's the one I was telling you. They're just going over you borrow so it always has debt so nobody can sue you. That's what Bezos, that's what Musk, that's what Gates, that's what all these guys do. That's why their tax rate is so low. That's what they do. It's that simple. All right. The bank has the priority lien when they give the person a loan. So therefore, there's no reason for somebody because all the shares are pledged, right? You're not holding any shares, they're pledged. So that's what the major thing is. All right, let's go. Religion, organization, don't do it, man. Don't do it. A religion organization, they say put in a nonprofit. Don't do that either. That's even worse. Don't do that. Okay. Institutional asset protection without the trust. For personal liability reasons like a personal car accident or divorce, Wall Street elites use standard, highly regulated legal protections that do not involve rogue individual trustees. Yeah, we know. Wall Street executives don't face these problems because the corporation itself protects them from the top down. Exactly. That's exactly right. All right. All right. Here, I finally, at the end, I finally had enough. I said, I assumed you're already going to have corporations in Delaware, New Mexico, or Wyoming, since we were talking about asset protection, personal protection, because I knew he was talking about all this stuff. So they said that is completely fair assumption. And I apologize for not making that baseline clear sooner. When discussing serious asset and personal protection, forming the corporation or LLC in a big three state, Delaware, Nevada, Wyoming, is the industry standard. Even with the corporation formed in one of these asset protection havens, personal lawsuits create unique. My screen went down. Personal lawsuits create unique challenges depending on the state-specific laws. Big three. I won't get into that because I'm going to respond, I'm sure. Hold on, let me see if I get a response. Yes, So if this, I don't even know, I just wrote stuff. Should, it said holding company. So I said it should have a holding company NDE as LLC. I write gibberish. Just remember that. All right. I just type stuff because they know what I mean. As soon as I say holding company in DE, that's Delaware. Here we go. You're 100% correct. If the creator of that image wanted to show a realistic ironclad asset protection structure, the blueprint should have explicitly labeled the holding company as a Delaware LLC rather than using the generic corporate box underneath a private trust. By utilizing a Delaware LLC as the holding company, you unlock the exact statutory defense that makes the trust completely redundant for the most business owners. Why the image should have specified Delaware LLC. All right, we already knew the answer, ladies and gentlemen. We already knew the answer. I just had to see how far we'd go. I'm having a little fun with AI, ladies and gentlemen. All right. So hopefully that helps you out. Check your emails when you get time. Yeah, I already checked the emails. If you guys are still here, I'm glad you stayed because that's a master class in how you set up your corporations. It's very simple. It's not that hard. It's just that most people, it's out your scope. How many people have even set up an LLC, right, with an operating agreement? So you're out of your scope. So when you start telling people go to set up things in another state, and then wherever you live, set up the subsidiary where you live with an LLC, and you make sure that the holding company owns these LLCs, and all the assets like deeds would be in the name of the holding company. So the holding company is holding the deed, right? The LLC is the management company, right? Simple as that. Could be that simple. So therefore, you walled yourself off from any assets. I mean, any lawsuits. All right. So just think of those things. All right. Let's see here, man. Where are we at? We got something. What's happening? What's going on? Wait. I had something out. Oh, I know what it is. Dollar falls to 3-month low on Treasury buyback worries. Okay, ladies and gentlemen, this is how it's going. You're not going to get saved. It's not going to happen. You're not going to escape out of this. In fact, let me do something else because that's not the one I wanted to start with because Brian P. sent me over something. Mr. Dividend is responsible, ladies and gentlemen, for these PSAs that you need. It's Friday night, just got paid, parties thumping, beige book. Wait, the beige book? Are you serious? Ice cream recalled in 3 states for possible rubber. Yeah, what can happen when you dismiss FDA officials? I don't know. Jeez, this is sad. Oh, the beige. Okay. Current economic conditions for the Federal Reserve District. Dang. I got to put that. You guys got to go read this. Thank you, Brian P. It's from June. This is awesome. This is awesome stuff right here. I'm going to put a link in the chat room, everybody. All right. I'm going to put a link in the chat room. All right. Thank you. All right. You're welcome. Melanie Bonita's in the house. Melanie speaks. The superstar's arrived. She's here. Hopefully all's going well with you. All right. So here you go. I just want to keep bragging. We already know which way to go. But ultimately, look at all this after it's said. If the blueprint was properly labeled as a Delaware LLC, it would instantly resolve the vulnerabilities we discussed. Statutory charging order protection. That means any lawsuits, anything has to go through the board. That wipes that out. The sole member defense. Yeah, don't do sole members, ladies and gentlemen. Don't do that. All right. That puts yourself up. You're controlling that means they can tell you what to do as a sole member in a lawsuit. So therefore, you need a board. That's why you go Delaware. All right. If you want to get really overprotective, right? And you got some reason to do it, like what's going to come up January 9th, 2028. I have a reason to do it. We're going to be in Delaware. Just letting you know. We have subsidiaries in another state. But that's going to be the holding company. And I even set up a different way than what we talked about tonight. I'll just give you guys the Eric Bird method because Eric Bird has a problem with federal and state governments once you start kicking the rich dude's ass. All of a sudden, like I said, the rich dudes are the first ones to go, oh, we need some sort of regulation. I think they're messing up the regulation. You should go look at them. Show up, do an audit. They can't be doing things right. They're kicking our ass. They don't say that, but that's the point. They're kicking our ass. They go over there. They got to be doing something wrong, making an audit. Because now you got to spend money, right? On the audit. Your CPA, an attorney or two, you got to, because the state showed up. And then if that doesn't work, oh, feds, we donated to your charity funds and all did that. We bribed these dudes. Go down there, man. There's got to be some federal law that you can get them. So let's just do the Eric Bird method. I'll give it to you. You can't even pay for this type of stuff. You know how much you'd have to pay for this? Let's go. It's now free on AI. And I use the free version of AI, not even a paid version. So I'm messing with free version, and the paid version might have got to the point earlier, but I just like seeing what it would say, so then I can just tell it, because I already know the gatekeepers wrote the programs. So that's why they're not just going to give it to you. So if you don't know, then you just do it as far as you know, and you think, oh yeah, I'll just do it with that trust thing, and it says it's not that bad. It said it was good, and you just go off with it. But I'm like, hell no. I know what's wrong with that structure. So that's when I said, no, money's going to be siphoned by the trustee. That ain't going to work. Then I said, oh, but that can't work in no other places than New Mexico, Nevada, Delaware. Soon as you put your companies there and you have a board, this is null and void for having a trustee at all. I already knew that going in. So that's why I just want to see what it's going to say. But my point I'm trying to make about AI is they would have got you caught up, because it gave you all the things why you should do it. And then after you did it, you would have went to the most ridiculous choice of all, where your trustee all of a sudden says, I don't have to listen to you. And that's a problem, because they go, well, we control your board now. So your wishes are no longer going to be part of this equation. Especially since I can charge 3% a month off of all revenue. I can charge to have the books gone through with my own friend CPA. I can do whatever. I can siphon money and say my salary is $150,000 a year, even though you don't take one. You see where this goes. So I already knew all this. So that's why I just like seeing what they're going to say, because I just want to give it bits and pieces. Because after I chop it and chop it and chop it, all of a sudden they're like, oh, damn. I'm like, I already know. But most people would have already, they don't know. So that's why this is so dangerous. Because what they say is actually correct, but it leaves you vulnerable. But it makes it seem like you would not be vulnerable. And that's why that's a problem. All right, just so you guys understand. All right. This is interesting. Look, they even go further about this, right? Substituting Delaware. Notice that setup. Okay, so the Eric Bird method. Here it is, plain and simple. So we're talking about holding company, right? Like, let's just start with that structure. Let's start with this structure right here at the very beginning of this. Let's go with this structure right here. All right? Where they have a trust up there. Okay? That's cute. Very cute. But instead of having a trust up there, why not put holding company number 1? Okay? Now, with this structure, what I do, holding company number 2. All right? Now you set down the LLC under holding company number 2. Okay? And then I have holding company number 3. And people are like, what? You see this structure right here? Pretend trust is holding company number one. Holding company number two is what you see on the screen. But how about if holding company number one also has another holding company number three? How about the trust that which is holding company number one owns? You own the other corporations, the subsidiaries, the LLCs. All right? Cool, right? But guess what? Holding company number two manages all the LLCs, and holding company number three that you don't see on the screen because nobody sees it on the screen. Guess where all the assets are sitting? That's right. Holding company number three that has no interaction with nobody other than the assignment of every asset is in holding company number three. Just sitting there chilling. No interaction nowhere. People are trying to jack you, but they can't because the operational companies are already owned by the holding companies directly. The holding company where the trust is actually owns holding company number three. But you got to go through one, the LLCs, two, the first layer of holding company, which you can't because they all three have boards. And now you can't even get past that. And if you did, well, now you have another one. And then when you get to the other one, it's like, oh, damn, where's the assets at? These guys have nothing. I know. It's the other one that has no direct line to anything. Bye, you lose. Kicking your ass. Oh, sorry, ladies and gentlemen, I get excited. I get excited talking about this. I'm kicking your ass. You can't do a damn thing. That's how it works. Okay, the Beige Book, ladies and gentlemen. Forgive me, I get excited. Fred. We're talking about big dog business tonight. This is what people pay lawyers for. $10,000. Hey, man, I want to set up a corporate LLC in Delaware. And I have another company in Texas that I wanted to be the subsidiary of, and they got to own it. Oh, hey. That's going to be $15,000, son. Then you're going to need your accountant. Either way, 10, 15 G's. We'll set it up for you, no problem. We just went down a list. You guys might have to run this on replay. We went down a list for you. We gave you a playbook. And then you set up your playbook. Then I just talked to you about the playbook. I showed you the instruction. You go in. Now you tell them what you want to do. You don't have to do the Eric Bird method. You could just do the holding company owns all the corporations underneath, but your holding company is safely in another state like Delaware is the number one. If you're going to do several LLCs, I would recommend that. And then it's in your state is where the LLCs are. And also, very, very, very good points I forgot about. Your LLCs cannot be connected. LLC has to have its own separate business address, own separate bank account. Cannot be shared. All right? So we might as well go this whole thing. The other thing, a lot of people will try and do those postal mailboxes. Okay, that's fine. Because they oftentimes have offices you can rent and boardrooms you can rent. That's fine. The problem is you can't put them all there. Because if you put them in the same building, then that's going to be misconstrued as, wait a minute, they're not separate entities. Each has to operate as a separate entity. So the safest asset protection means they should be in another building somewhere else. All right? Unless, of course, you have money to spend with a big time corporate lawyer and you want to spend $100,000 for them to structure you so you can be in the same building. So then therefore, if somebody ever comes to sue any one of your entities, they're going to say, wait a minute, they're across the hall. That's not separate. They're in building 103. You're in building 110. You're in building 1105 upstairs. That looks awfully sketchy. Just remember how you're setting this up and what country you live in. You want to make sure that no judge can ever sit there and be like, oh, yeah, even though you're on floor 1, 2, 3, 4, 5, 6, and each one they're on a separate floor. Oh, yeah, well, when you come down in the elevator, how do we know you guys didn't eat in the same lunchroom? You're in the same building. You guys are discussing things. You're not acting like it's a separate empire. So we're going to make this one empire. Therefore, the liabilities of one is the liabilities for all. So just remember, Eric Bird says, don't do that. Put them in separate locations. Don't get sloppy, especially when you're successful. If you're mildly successful, all that happens is nothing. It's when you start coming up, and you get the attention of gatekeepers, as I call them. Because now you got their attention because all of a sudden you're taking some of their market share away. Now all of a sudden you got to deal with these dudes. And they're the first ones that's sending the police, the auditors, and whoever, their friends in the, whatever division of the state. Hey, have your guys go down and check them out. And all it is a hassle for you, but it's going to cost you money. And that's their whole objective. You're going to have to get your lawyer, and say, hey, man, these guys came down to check our paperwork. You're handling it. Go down there and check it out. But your lawyer's not going to say for free. And these guys are going to say, well, we need this, this, and this by 3 weeks. We'll be in your boardroom or you can come to our offices. Your lawyer's going to do that. He's going to charge you the $1,000 per hour. You see how this goes? That's how they siphon off the people coming up. This is how they get rid of their competition. All right. So you guys got to understand what you're dealing with out here. All right. Fortunately for me, I've had this happen to me, federal and state. Because once you start kicking their ass, these guys start protection. Their protection is sicking every agency on you or the DOJ. If the agencies can't do nothing, their next step is the senators. But it's easier if they just call the DOJ. Because the DOJ will just believe anything they say. I told you guys, I was in a federal case where they said I stole $300 and some odd thousand. So they could bring a case. Then the U.S. attorney tells me, oh, yeah, we've been checking you out for 3-4 years. I said, why? It has to do with real estate. What's your problem? There ain't nothing happening. But they told us. I said, what do you mean they told you? What are you talking? I said, they told you? You don't have evidence, right? He goes, oh, yeah, we do. They said you took it. And we're saying we believe that our investigators, the DOJ, the FBI, we believe them. Why would they lie? I'm like, what do you mean? You serious right now? Why would they lie? Oh, I don't know. So after I told you guys this story, it's Friday night. After we got it down, came in with paperwork. I said, listen, 15.5 is what I did. I found 1,500 more that I paid. So we're down to $13,500 of this alleged 300 and some odd thousand dollars I stole out of thin air, which was a lie. So you can drop your case. He says, I'm not going to drop my case. I'm like, what are you talking about right now? I said, worst case is I should get I can't even get probation under DOJ rules. He's like, I know. But the thing is, we spent like 3-4 years. I think it was 4 years. But anyhow, 3-4 years for the investigation. So I just can't drop the case. I'm sitting across the table from the U.S. attorney. He's telling this in my face. You can imagine I was young and I was brash and I got heated. You can understand I'm sitting at the table like, I can't believe this, man. Are you serious right now? So you're just going to try to throw me in jail just for the hell of it? Yeah, pretty much. But I don't see no reason why I need to do that. I just need you to plead to something so then that way you can have home confinement or something. What are you talking about right now? I don't need nothing. Oh, well then, I guess we'll go to trial. Now, of course, my attorney's sitting there like, Eric, what's wrong with you? You're going to risk going to trial against the DOJ. All they need is somebody on the jury to sit there and be like, yeah, and 98.7% of all black people are found guilty in Nevada. I'm like, oh shit. He's like, do you really want to take that risk? And if they do win, you ain't going to be doing no 3 months home confinement. Let me know what you guys would decide to do. All right? I'm just saying. Crazy crap, man. Um, Crazy stuff. Here we go. Ice cream recalled in 3 states for possible rubber. This is insane right now. Hold on. Can you guys believe this? Is this for real? This is for real. Wow. This is crazy. This is insane. Come on now. Let's go. We already got cut off once, 1 hour and 45 minutes in. It was a great conversation tonight because we were talking about real estate investing. We were talking about ownership. And it led to start a business. And now you understand how you structure businesses. It's worth it. People might try to. That's why you should put people in place. And normally, this is why family members are part of the board. So if you have someone else, then you can't get overthrown. You follow what I'm saying? All right. I don't know what's going on here. I can't put this on screen for some reason. I've tried several times and it won't allow me to get this on screen, off screen. Why is this happening? Okay, that's off. But for some reason, oh, I see what's happening now. Okay, we got delayed activity. Let me see what else. Tower 2, which is right there by the Farallon, overlooks everything. You can give me $35,000 down is what I've been asking. 35. Take over my payments. You're only gonna owe $114,000 for a $235,000 two-bedroom, two-bath condo. Support at Stop Struggling Now. All right, let's go. I think I got this reversed here. it of the economy really is. You guys really should go get it. You should really look at it. All right, here's the next thing that's up. Meet the trending or okay, combining enamel support and clean focus in a nicotine-free format. That's interesting. That's pretty cool. Okay, that's wellness. I love it. That's wellness for everybody. I get excited when I see things like this, Brian P. This is helping people. This is what we do here. This is what we love. All right. Make sure you guys smash the like button out there if you like what we've been talking about. Hopefully you learned something tonight because we got heavy in the holding companies. All right. We got what's this? Your current destinations don't support this. What are we taught right now? What's happening? I just gotta do not support commenting from the studio. What? What is this? Well, this is something new. Okay. You can just get moving. This is crazy. I'm trying to get things. All right, I'll do it this way then, since you guys want to play around. We'll go a different route. All right, ladies and gentlemen. So they wanted to play around, and we got to play around. All right. Out. Jeez, these guys are killing me right now. We have a blackout, ladies and gentlemen. As soon as I go looking through things, all of a sudden a blackout. These guys are killing me up in here. Let's go. Okay. Oh, come on now. I might have to change back to StreamYard if this keeps happening. It's much easier to use, but I just don't like how I'm always having difficulty lately. Like check, check, mic check. Look at this. Check, check, mic check. What the heck's going on? The speaker's not on. All right. We can hear you, says Brian P. But unfortunately, I'm having a little problem in this back office. The HBCU, which I can't show on screen, I don't even know what they're talking about right now. All right, in case you're new here, make sure you guys smash the like button. Let me know what you guys thought about the holding company situation, because that's major. That's ownership. And oh, by the way, if I don't say anything else besides asset protection, ownership protection, personal protection, just remember the valuation of your holding company, all of the parts combined, is more than they're separately. So because the structure, you structure it under the way I told you, that increases the value of the assets, because there's a no, the lower the risk, the more valuable. The higher the risk, then you're going to be you're going to be valuation is going to be less. So just remember that. All right, just remember that. That's all you got to remember. All right, here we are. Tamara Larry, another investor's in the house. You missed the holding company structure. We went AI. We saw something on, I saw something earlier today on Instagram. I took a picture of it. I put it inside AI. I again will say AI does tell you things that will get you in trouble. So people initially, if you would have put listen to what they said, you would have thought this was a good way to set things up until, well, like I said, some people out here know that that's not the way. So I just went down the list to see what they're going to say, because they said everything that the gatekeepers would want you to say, because the gatekeepers want to get you if you suddenly win. They try to limit who's going to be survivors. Tamara Larry, welcome to the SSN Nation Financial Friday Night live stream. And she brings her usual tagline after a long week's work. Hello, all. Hello, all to you as well. Hopefully, all the young guns are out there being the young guns they are. So, glad to see you once again. Brian P says, great information. You keep freezing up. He's right about that. Told you, man. Hey, Brian P, you've been here long enough. You know we were talking about something deep right now, that holding structure. It's all right when we started talking about the holding structure and that trust up top and going nice and slow. But all of a sudden, when we start talking about, well, wait, he's going overboard here. He's starting to give up some other stuff. Now, all these people going to be protected out here. Yeah, now all of a sudden we got problems, because I started saying the Eric Bird method, and they're like, oh no, wait, hold on. He's going further, he's going deeper. He's giving these guys some, oh, enterprise grade protection. This is what the big boys do. No, this is what the regular citizens should be doing against your sorry asses. All right, here we go. Just putting it how it is. Because once you're successful, it's hard enough to be successful. The worst thing ever is when you have somebody that could even be your competitor try to make sure that you have a downfall because they're able to, well, I know this, the guy that does inspections, or, whatever the reasons are. That's how they operate out here. They ain't out here operating on a fair thing. They're trying to make sure that they take advantage of other things. They ain't trying to beat you with their own weaponry, with their own business. They're going to go, oh, yeah, man, let me go down here and make sure his permits, he can't get permits for 6 months. All that kind of crap. Let me go down here and make sure, hey, they need an inspection. Why don't you show up? The audits. Why don't you show up? Like I said, they just keep reaching to their sphere of influence, and then that's how they try to get you. Keep up the great works. Thank you, man. Did you see Sprouts? No, I didn't. I'm having an issue right now. All of a sudden, when we start talking about all this stuff, you know, the the PSA reports, all of a sudden we can't do anything. Par for the The land legal battle ended. Always goes just immediately. I'm like, who are these guys, and what land or area is this college campus sitting on? Because there has to be a reason why this goes down. I'm starting to feel good that there's a possibility that some entity that performs the services that St. Augustine performs will continue to exist on that property. What? That's the attorney for the school is saying? Provide those services into the future, Bear said, according to the News Observer. Wow. The university also admitted bankruptcy filings involving disputed, including claims from individual students. Those student debts are no longer marked that way. University considers selling portions of campus. It's 105 acres. That's huge, quite frankly. What are these people out here doing? I can't even take this no more, man. I'm not even going to take this no more. Let's just get out of this. I'm upset. At HBCU school, here you go. Check it out. You can read this yourself. Did I see the Sprouts recall? No, I didn't. That's even worse. Bobby Marone, I see you on the other platform. Thank you for getting us late night in the house. Financial Friday night. Glad to see you once again. That's pretty awesome, man. Nice to see some old friends. Crazy. Exactly crazy, man. This is real crazy. But hey, this is par for the course. They have 105 acres. Somebody wants some of their acreage. So that's how I say, this is how people move in America. You think everything's up and fair and all legal and this, that. Nope. That ain't how it works. You give somebody a little lever to have leverage over you. They use it if they need to. And that's why I say build your holding company structures accordingly. And that's why I do it accordingly. And that's why we're going to be kicking their ass and there ain't going to be nothing they can do about it. Because I'm not going to be personally liable for it. I can't do anything. It's a board. Sorry. So Bad Bunny caught up in copyright case that could see massive consequences for reggaeton as a genre. What? How? It concerns a track called Fish Market. Originally produced by Steely and Clevie back in 1980s, same component, 1,800 songs. This is massive. This is massive. What? Bad Bunny's legal team and attorneys representing other artists succeeded in getting the judge to reconsider. That's what we're doing out here, ladies and gentlemen. That's what we're doing. This is what we're doing. What the hell? Oh, we got one. Damn. We got a problem. We got one of them flying things just went through the window. Oh my God. This is bad. I can't find him now. But he flew. I was like, what is that? Did you guys see that? Flew through the window. Now I got to end the live stream. I got to get this goddamn. You know them big ass things that fly? I've seen them in Florida. Apparently, they're in Georgia too. The first time I've seen that. What the hell? That thing's moving fast. And I busted up something too. Ugh. That thing was big. I was like looking like a little. I thought it was like a firefly, but that thing like was gone. That thing is moving. It's in here somewhere. All right. Well, we got to end that person's life. All right. Crazy. Yep. All right, ladies and gentlemen, I'm going to be out. I got to find this thing. I was like, what the hell is this? Anyhow, I've seen this before. Down in Florida, I was in a hotel and all of a sudden I saw this this thing flying at me, and it looked like a big ass roach. And that's what this looked like. I thought it was a dragonfly until it got like, wait, that thing was like this big with wings on it. Wow. It's in here somewhere. It ain't leaving, but we're going to make sure we get that thing done. All right. I'm going to be out of here right now, ladies and gentlemen. It's been fun tonight. 2 hours, 7 minutes. That's long enough. By the way, I have a movie that you should watch, The Rip. If you haven't seen it, it came out before. I've already seen it. And it just came on today. Pay attention. Actually, they should have slowed it down just a little bit because you got to pay attention. It's awesome. Because if you like twists and turns and a little chaos and little drama and things of this nature, it has Ben Affleck and Matt Damon in it, and it's called The Rip. So I watched it earlier today. So I've seen it 2 times. And the first time you don't notice, you kind of got to pay attention to things. You don't really notice. But the second time, since you kind of saw it the first time, now you notice. And it's like, oh my God, this is diabolical how they did it. It's great writing. Whoever did that storyline, it's great. And it's pretty good. So you got to check it out. It's called The Rip. All right. So anyhow, thank you all for being here tonight. I appreciate it. And hopefully you learned something. We went off of the real estate we did, but you can do real estate. But as long as you have a holding company, that's just that structure alone could save you and make sure all your assets are owned by the holding company. Your LLCs are doing nothing but operating what the holding company owns. And they're the ones that generally interact with the public. And you make sure that you file your paperwork, make sure that you run your LLCs properly and your holding company so no lawyer can get through your corporate veil. That is the key. All right. Ownership, ladies and gentlemen. That's the game. You need to get something by 2027. All right? Just so you understand. So with all that said, I love you guys very much. Just make sure you guys stay out of trouble. I don't have the exit video because apparently EV Mux got hacked. So all of their systems are, everything that was in the system, the videos and everything is gone. And so they have a put big message over there. So I'm assuming it says we have a service problem. So either somebody's server got hacked or they got hacked. But either way, that's why things are acting funny up in here. But on Monday, I'm going to reload everything up. So we'll have everything going. I kind of like this little background right here, even though it doesn't say Stop Struggling Out Live, which was much better. But maybe I'll start putting in some new things. All right. Hopefully you enjoyed tonight. I appreciate you guys again. But please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. And that's why you got to protect yourself. And you got to get ownership. And make sure people have to rent from you instead of you continually have to rent from everybody else. You're going to have to get above the water level. 80% of people watching this are living paycheck to paycheck. You got to make sure because prices are going to keep rising. And the Beige Book, if you didn't get that yet, I highly suggest you read it. Let me see. Do I have it up still? No, I don't. Damn it. Let me make sure I put this down in the links for you. Let me see. Where is it? Here we go. You should read this. Then you'll understand. The Federal Reserve does not run with the Trump regime. All right? They get their own statistics from myriad of sources. So therefore, they have a different outlook and they have a different reason on doing things. And they actually put it in their reports. All right. So this is going to be totally different than what Trump says. Just remember that. Or Bessent says. Or any of their dumbasses say. All right. They're DEI hires. Because all they're doing is siphoning money from America. They're not trying to help us. All right. Just remember that. So with all that said, make sure you watch your back. Make sure you watch your family's back. But no matter what you do, just make sure you keep your head up. Keep moving. And I'm out.